Archie, you're never going to believe what my Costco membership comes with now. Gold.
Well, Rob, let's dig into that. I'm Archie Hoxton.
And I'm Rob Hoxton.
And this is Last Paycheck, weekly wisdom to help you retire and stay that way. Welcome back to the Last Paycheck Podcast. We're your hosts, Archie Hoxton and Rob Hoxton. And today we're going to talk about gold. And actually, something I just learned is that you can buy gold at Costco now, little gold bars. I don't know if you can buy them in bulk, and I don't know if they're a Kirkland brand, but they're there, and apparently they're all the craze right now, and they're flying off the shelves.
Kirkland nuggets, Kirkland bullion. I mean, they're good with, they make good golf balls.
Yeah.
They make great olive oil.
Good pizza.
Yeah.
Yeah, cheap pizza.
All right.
Actually. So
I love
anyway.
how you can get really large things of French's mustard. I wonder if their gold is actually supersized too.
I don't know.
Maybe not.
Probably not.
I don't know. So gold, good investment?
Yeah, so we're going to talk about that. So, I mean, there's a lot to consider. And, really anytime we hear about inflation, economic crisis, geopolitical turmoil, the gold guys kind of come out of the woodwork and start pitching different ways of buying gold. Gold
right?
bugs. Yeah. And so, there are lots of reasons why someone might consider buying gold. Some of them are, I would say, legitimate reasons. Some of them are maybe a little bit shakier.
A little misplaced, maybe?
Yeah, I would say that's fair. First one that normally comes to mind for me is inflation, right? So it can serve as an inflation hedge, right?
And we've been seeing that kind of, a lot of that in the news recently, right? It's kind of maybe ticking back up a little bit.
Yeah, inflation's kind of come back up. So anytime, you see that, often people are sort of jumping to gold to protect themselves from that. It's a real asset. It's got value that isn't, necessarily, it's not tied to the dollar, right? It's its own thing. And so people will jump on that to kind of, as an attempt to preserve the purchasing power of their wealth. Another reason might be speculation.
Right, which is a little bit beyond what we like to talk about. We're not speculators. We're investors, wealth builders. And, so speculation is, it's kind of like going to Vegas.
Yeah. You're buying it merely on the hope that someone else will buy it from you for more than you paid for it at some point in the future, and not really for any fundamental value reason. And so people speculate with all kinds of stuff.
In our daily practice, and for 32 years, it's been one of these things where every time people get a little bit worried, they want to talk about gold. They're seeing advertisements on cable television, on the internet, and every once in a while, a client will say, "I'm thinking about converting my IRA to gold, or I'd like to buy some gold and just kind of like hide it in the house or put it in the safe or whatever, just in case."
Yeah.
And gold is like any other asset. You wouldn't want to have too much of any one thing, right?
Right.
You got to be diversified.
Right.
It also has some challenges, particularly physical gold, which is the only kind of gold that'll do you any good if the world economic system collapses, which is usually what people are thinking of when they're talking to us about, should I own some gold, right?
Yeah, that's exactly right. Most of the time I'm worried about World War III, or I'm worried about, the collapse of our economic system, like you said, and we're going to have to go back to just like bartering with people. I don't know, that I've never found that all that compelling, because I'm like, we don't even know what that would be like. We have no concept of that. And it's hard to say whether people will want gold at all. I mean, you probably are just going to want the things that keep you alive. Food, clean water, fuel, energy sources, heat, ammunition, things for hunting. I mean, things that just are going to be able to keep you from starving to death or freezing to death. Those are going to have the most value.
Right.
And it's hard to say whether someone would have any interest in gold.
Yeah, I had an interesting conversation with a client was a dentist many years ago, and we were talking about, what would happen if the economic system really kind of fell apart. And this was around the time of the Great Recession, 2007, 8, 9 timeframe. He was a dentist, and he thought, maybe I should have some gold. And I said, yeah, maybe you should have some gold if it makes you feel better. But think about your own practice. If you can't accept the U.S. dollar for whatever reason, and you have to be paid in some sort of physical asset, would you rather be paid in gold, some little tiny sliver of gold, or would you like to have a couple of chickens and a gallon of milk? Right?
Yeah.
I mean, gold, you can't eat it.
Yeah.
It's really hard to spend. In fact, as a matter of, I got a little bit of useless information, but you've probably heard the term piece of 8 or 2 bits.
Mm-hmm.
That all goes back to the Spanish dollar, which was called the real. And it was like in the years leading up to the 1750s, you could get a piece of 8, which was a Spanish dollar, and you could cut that with a pair of tin snips, I guess, into 8 pieces. 2 of those 8s were called bits, and 2 bits would have been a quarter of a dollar. And so, our grandparents talked about 2 bits, and that meant a quarter. Sometimes they would say, I'm not interested in your 2 bits, which was not about money. It was about your opinion, right?
Yeah.
So there's all kinds of stuff, lore that comes out. I think money lore is interesting. Anyway, I digress.
Yeah.
It's hard to spend, though.
Yeah. And because you've got a new problem, which is you have to store it and keep track of it. And that's one of the big problems with gold that people run into, because there's a few ways to own it, right?
Mm-hmm.
You can own the real thing, which is, again, it's the most practical if you're banking on things falling apart. But it's maybe the least practical if you're convinced that life will continue relatively close to what it has been for a long time. And then you've got to figure out, where do I put it? How do I basically convert it into cash that I can use for my normal living expenses, or whatever it is that you want to buy? And then that's the other problem is, are you going to really get the true value of the gold when you go to sell it? And for most people who are selling gold to cash out, they're probably going to a gold dealer.
Right.
And so when you go to a gold dealer, you're not going to get the exact price, because the gold dealer has to make money to stay in business.
And picture this. Okay, so this is like right out of a Far Side Gary Larson cartoon. There you are. You've got a box in your hands, and you are walking to the gold store. Every criminal, if I were a criminal, I'd hang around the gold store, right? And I'd look for this goofy guy that looks like me walking up with a box in his hands and really struggling with it because it's heavy. And I'd be like, I bet that guy's got gold in that box.
Yeah.
Right?
That's a good point.
So, it's dangerous.
It can be dangerous.
It's not only impractical, it's dangerous.
Yeah.
What's the other way to own gold? You can own in like an ETF, right?
Yeah. So you can own an exchange traded fund with gold. And normally, so what you're doing is you own a share in a pool with lots of other people. It's the same as an exchange traded fund for stocks or bonds. What's different is the underlying asset. So the underlying asset in a gold exchange traded fund is the gold itself, right? It's stored away in some vault, and you've got a fractional ownership in that gold. You can also own a portfolio of gold futures contracts, or you can own mining companies and other gold-related companies.
Oh, the stock and
the stock, yeah.
Mm-hmm.
Yeah. Or some of them are a combination of those different, alternative ways to own it. So this is the easiest for liquidity. You get to participate in the changing value of the gold without ever having to have the physical gold itself.
But it won't do you any good in an Armageddon situation.
Yeah,
right?
that's right. Yeah, because
so you lose that.
Yeah, that's just going to be, it'll close down the ETF and boom. But that's where actually you can get, if you're interested in gold for a hedge against inflation, for example, in your portfolio, or to diversify and have an asset that doesn't perform the same way as your other primary assets like stocks, bonds, real estate, things like that. And so in that case, then that might be a good way to own it if that's your objective. You don't have to bother with going to the gold dealer and that kind of thing.
Archie, in terms of an investment, how is gold similar to or different from traditional investments like, say, investing in the S&P 500 index fund?
Yeah, that's a good one. And this is one, there's a lot of comparisons with, S&P 500 and gold. And so this is the important thing to know about this is that when you're owning gold, the only return that you're getting is the fact that the price of gold has changed, right? And so if you buy it here for this amount, you can sell it for more later. Hopefully, or maybe less. I mean, it is kind of a volatile asset. So, and that's all that there is to it, right? It's an asset, and it is what it is. It's just it's a thing. When you're buying a stock, you're buying something much more complex with many, many, many more ways that it can have value. So you're buying a share of a company. A company has tangible assets, kind of like gold is a tangible asset. The company has
like a factory, trucks, trains, all that kind of stuff.
Yeah.
Inventory.
They have intangible assets like goodwill. They also, the most important part is that companies earn money, and ideally they earn a profit after they have money left over after they've paid out all their expenses. That is the biggest, most important element to the return you get owning a stock. And gold doesn't have that.
Right.
It's just the tangible asset. There's no income. And so the other factor is that you can make, in the stock market generally, all the collective investors are constantly trying to anticipate the expected earnings of a company and then incorporate that into the price of the stock. So if a company's doing well and they're expecting to earn more and more each quarter and each year, may improve the value of the
So when you hear
stock.
someone say that stocks look like they may be overpriced, what they're talking about is the price of the stock relative to the expected earnings, right?
Right.
And you can't do that with gold because it doesn't have any earnings.
Right.
You can't really put a value on it because it's completely speculative. It's all based on the emotion of the investor class.
Right.
Are they fearful? Are they greedy? That's what moves the price of gold.
Right.
Yeah.
Right. Yeah. And so, and that's where, when you account for the total return of the stock market, which is the appreciation of the price of stocks and the earnings and income provided by the stocks, you account for all that together. Stocks are a much, much more powerful wealth builder over time. There's so much inherent value to them. That's all relative depending on the company, of course. But so there's a huge difference between them, and I think it's important that distinction is made. And when you look at the returns of each over time, it's a pretty stark difference where stocks have outperformed.
I think it's also worth mentioning that if you buy gold or any precious metal for that matter from a dealer, and they advertise like crazy on the internet and on cable, let's say you buy a chunk of gold for $1,000. If you were to try to sell that gold back to that dealer right away, like immediately, they're not going to pay you what they sold it to you for, right?
Right.
So you've got this hurdle. So if they sell it to you for $1,000, same piece of gold, they might buy back for $750. So in order to make money, you've got to clear that $250 hurdle in order to be in the positive.
Yeah.
So that huge cost is tough to overcome. Number one, today you can buy and sell stocks and bonds or S&P 500 exchange traded fund and pay no commission.
Yeah. It wasn't always like that, but the stock market has it's modernized, and companies, through competition with one another, brokers have found ways to lower their brokerage fees in many cases down to zero. If you're going to, as far as for buying a stock, you're not paying that commission in every scenario anymore. I mean, so you still can in certain instances. You have to look at your account and your agreement with the broker. However, it is very common now. So it's also more liquid, right? You can go right on your phone. Oh, I need $500. Bam. You sell some stocks. Money's available in 2 days.
Soon to be 1 day. So let's sum it all up. So gold, investment or speculation, or a little bit of both?
I think it's a little of both. I think it depends on what you're trying to accomplish and why you're owning it, and how much you put in it. That's what I would say. That's my opinion. Others may disagree. I think it can be an investment. I think much of the time it is a
If they did, they'd be wrong, though, right? Just kidding.
Yeah. Well, anyway, I think that just about sums it up. So we hope you enjoyed this. Please feel free to share your thoughts in the comments section. We'd love to hear from you. Otherwise, like and share, subscribe, and we'll hope to see you next time. You've been watching Last Paycheck, weekly wisdom to help you retire and stay that way. If you like this show, be sure to hit like and subscribe. Last Paycheck is available anywhere you get your podcasts.